Welcome to yet another episode of Disruption Talks, where we invite top experts to discuss digital acceleration, winning strategies, innovation, and scaling products. In this episode, we have the pleasure of hosting Daniel Thomason, Senior Product Manager for the Enhanced Due Diligence and AML, Anti-Money Laundering, Investigations team at WISE. So we'll have the opportunity to dive into KYC, AML, discuss open product roadmaps and the most pressing challenges of a product manager in fintech, and everything else that Daniel decides to tell us about today. So welcome, Daniel. Great to have you.
Thanks, Philip. It's nice to be here.
Pleasure is all ours. So diving right in, we always talk about the person first. So let's get to know you. A short personal introduction. So before we start talking about Daniel at WISE, what was before Daniel at WISE?
Yeah, well, I've had quite a varied life, both geographically and career-wise, actually, Philip. I'm Australian by birth, and so grew up there, did my university studies there, and actually straight out of university, I joined the Australian Central Bank as an economist. So I did 2 years there studying econometric models, banknote movements, financial stability, that sort of thing. And then from there, I became an escape room founder, was the next jump that I made in Australia. So if you head to Sydney, look up Next Level Escape. That was my kind of escape room adventure. Still number 3 on TripAdvisor, I think. And then I made my way into product and kind of wound my way around at a few different companies in Berlin and now in Estonia. Found my way into the fintech space, which has been an excellent sort of marriage of my economics background and my product management experience. So yeah, I guess really the thread that I've realized has run through all of these things is that my two passions are kind of solving interesting problems and surrounding myself with great people to kind of laugh with and do great work together. So I think my life has been a series of finding better and better ways to do that, I suppose.
So Next Level
Escape. So nextlevelescape.com.au. Check it out. The literature themed room is the one that I designed. If you want to go check out my handiwork.
Oh, given the opportunity, I for sure will. So okay, admittedly, I'm no stranger to a career path that's was as diverse as yours.
Oh yes. Mm-hmm.
So kudos there. And your current role at WISE. You're here now, you're here today. Tell us a little bit more about that. So what's the major mission? What's the KPIs? What's the thing that gets you up in the morning as a manager?
Well, so WISE was an amazing place to join because the mission is something I really believe in personally, and it's really, really clear to everyone working in the company and to our customers. Like WISE wants to make international money movements transparent, convenient, instant, and eventually free. That's it. 4 words, 4 mission pillars. That's where we're heading. And we know at WISE that it's not going to happen tomorrow, nor is it going to happen next year. This is like a multi-decade vision. But WISE has been around for 10, 11 years now. And the difference between the world of today and the world of 10 years ago in terms of how easy it is to move money around, WISE has just made an enormous difference to that. And so specifically in my space, I actually fell into the compliance products management space by accident. Before WISE, I was actually at N26, a neobank in Berlin. And I applied just for a product management job generically, and they put me in the KYC team. And I found it to be a sort of amazing experience working with compliance managers and the operations team to solve problems for the business while still kind of fitting within regulations and kind of creatively finding ways to use our technological expertise to improve on how banks typically do their know your customer like responsibilities. And then at WISE, I've taken that and kind of extended it, not just KYC, but also the sort of enhanced due diligence space and the anti-money laundering space. These are both kind of critical pillars of being a financial institution. And if you don't fulfill your responsibilities here, then it doesn't matter how good you are for the customers, you're not going to be allowed to continue operating. So our mission, I guess, within WISE's more broad mission is to find ways to mitigate risks of financial crime and prevent financial crime from happening while minimizing the impact on all of the 4 mission pillars. So customers' time, money, and nerves. Basically, that's how we see our role, and that's kind of what directs a lot of our work and our energy and our efforts in this space.
You mentioned you applied for a product manager job generically, but you also, prior to joining Wise, were growth product manager against product management. So not so generically at N26, responsible for the onboarding funnel from sign up to account creation, including KYC. So surely some lessons learned that carried along the way into everything else in the future, or am I wrong?
Yeah, no, totally. It's the growth side was super interesting because KYC in particular at a fintech company is such an interesting beast because it fits very much within the growth space, but it also is kind of a critical compliance function. Like it's the basis of all of the regulatory requirements that you fulfill as a bank. Like if you don't know your customers, you can't really mitigate their financial crime risks. You can't really know if they are sending money to a sanctioned entity, all this sort of stuff. And I mean, more broadly, if you don't know your customers, you can't serve them well either. So it's kind of a critical business function too. And so being in that intersection point of KYC being a really big part of the growth funnel, like one of the most friction-inducing parts of the onboarding, but also important to be rigorous about, be robust about, taught me a whole lot of lessons about, I guess, extending those traditional product management skills, which as a product manager, you're very used to making trade-offs. You're very used to saying, okay, if we ship feature X, then it's going to create this much tech debt, but it's going to get into the hand of customers faster. Fine. These sort of trade-offs you can make, and it's your bread and butter. Add on to this the additional level of trade-off of, okay, regulations say we need to do X, but doing so is going, like, if we take that literally, it's going to be super painful for customers. So is there a way that we can take that and figure out a way to comply with the spirit of the law and like fulfill the function that regulators intend us to, while minimizing the pain on customers? Is there a way that we can do that by maybe increasing our operations footprint? Is there a way that we can do that by maybe utilizing technology more creatively, which obviously translates to we need more engineering or data science power or so on. So just adding those additional lenses or those additional kind of parts to the Venn diagram of optimization that you need to be doing, lots of lessons from that. And I guess really though, it comes down to the same lessons that product managers learn all the time, which is have the conversations, listen empathetically to the stakeholders, get the good advice, and then try to translate the problems that you're solving into a common denominator so that you can make the best decision you can to add value. I guess that's the big lesson that I learned.
Sounds like a big one, and sounds like a lesson for sure. So check both boxes. So what I'm hearing is that before Wise, before N26, central bank economist, McDonald's manager, escape room founder, I wanted to ask you how all these past experiences are helping you with the current role, but I'm thinking of asking you, you wouldn't change that for the world, would you? Right? Like that career path was something that you couldn't have thought of or come up with if anybody asked you to. But now looking back, that was exactly what the doctor ordered, right?
Totally. And you said that you've had a varied path too, Philip. I suspect you're sympathetic to this, I guess. But yeah, it's not these items on my roadmap, on my career roadmap, as it were, none of those came up in the career advice sessions that I had in high school, put it that way. Like product manager, this wasn't really a concept discussed with me. An escape room founder certainly wasn't when I was 17, 18 or so. But yeah, I don't want to trot out the tired Steve Jobs cliche of connecting the dots backwards too much, but really, I think it kind of has a lot of merits. This idea of going where your interests lie, going sort of taking the next step that's in front of you, like figuring out, okay, at the moment I'm good at this and there's this opportunity to do this. Let's try it on and then see what happens. And then people say to me often like, okay, so is this it? Is this what you're going to be doing for 10 years? And I say, well, talk to me in 10 days. Like, I make the decision based on how are things going? Am I growing? Am I learning? Am I working with amazing people? Are other opportunities coming up that might be interesting to me? So to your question, I wouldn't change it for the world. And really, I think it's an enormous strength having this varied background, particularly for a product manager. I'm sure there's some roles. I'm pretty happy, for example, that my doctor has been quite mono-focused in learning biology and knows exactly where to insert the scalpel. I'm all about that. But for a product manager, I feel the increase to empathy that it gives me to have worked in, McDonald's operations role. Like I can speak to the agents who work on KYC and AML, and like it's a bit of a different feel. They don't go home smelling of fries, for example. But it is that kind of, like repetitive, optimize for speed, optimize for predictability of the process. 4.5 years at McDonald's taught me that super well. And then, the central bank, I really know how regulators think because I was one. Like, I was on the other side of the table tearing my hair out about how these insane banks are working. And now I'm on the problem causing side of the table, which is much more fun. But I can translate what I do into terms that I think regulators will understand and will be able to engage with because, I mean, I was there. My friends are still there. Many of them are rising through the ranks of the central bank. And just like founding the escape room as this last example, there's nothing like entrepreneurial experience to give you that perspective on what a business is trying to do and how hard it is to run a business. That particularly as a product manager, it helps. But I think honestly, for anyone working in a tech company or any size business, having tried to do it yourself, having watched your cash on hand slowly deplete and having had to sort of rustle up clients from wherever you could or run the marketing or just do whatever it took to make the business go, it just gives you a sort of problem solving ability and perspective on what's important that I think is just invaluable for being a really effective and kind of value adding member of a business. So to your question, wouldn't trade it for the world. Very happy. Maybe it's time to focus a little bit now, but I don't know. It's like that prayer. Someone says, God, please make me good later. Same thing. I think it's like, I'll focus next year.
Yeah, somebody asks what you're going to do in 10 years. You say, I don't know. Let's find out together. Right?
Exactly. That's it. Exactly.
So how are you using data at Wise to build a better fintech product? Because I'm assuming you are.
Happily, yes. Wise is very data driven. I'm really impressed. Like, I've been at Wise for 13 months now, and one thing that struck me is how well Wise has democratized access to data. Like everyone throughout the whole company has access to our Looker instance, so they can create their own dashboards, run their own queries, ask their own questions, and sort of get a sense for themselves of where are we creating value and where could they personally be doing a better job of that. So we sort of spread this throughout the company. And that's kind of one of the key pillars of making good data-driven decisions, like not hoarding the data and not making data-driven decisions the sole domain of kind of a priesthood of anointed analysts and product managers, as it were, but letting everyone come to the table with the same ability to say, hey, you said we should do X. I'm not seeing that. Like, I'm seeing that actually that's going to drive very minimal value. Have you seen this? Like, what do you think of this query that I've run, this dashboard that I've created? And letting everyone have that conversation on the same level playing field is a huge part of how we're using data. And the second part, I think, is something that we are sort of evolving on slowly at Wise, but it's a really interesting aspect of having a business that's so big and is trying to kind of create value across what are quite different pillars. Like I mentioned those 4 pillars earlier. So we want to be instant, transparent, convenient, and eventually free. Like, these are all very good things. And they're kind of like Amazon's 3 customer pillars almost, of like, customers are never going to want us to reverse on any of those dimensions. Like, faster, more transparent, more convenient, and cheaper are always going to be the right direction. But the tension is, how do you compare different initiatives that go in those different directions? Like, how much worth of transparency is worth 1% of a price drop? Or how much is 10 extra seconds of speed worth in terms of convenience? And so this is something we're kind of working on now in terms of being more data-driven, rather than just saying, okay, these are both good, so go to it. We're trying to get to the point where across the organization, and certainly within each individual tribe, we can have this kind of global list of initiatives and compare across them and say, okay, this team's working on making our transfers 10% faster. This team's working on making it more convenient for businesses to add new users, for example. And we have some sort of common denominator, some sort of like translation mechanism to say, okay, here's the value of each of these to Wise, to our mission pillars, and here's kind of how we think the resourcing decision should go, and here's kind of the importance we should add to both of these. So this has kind of been a really important evolution of the discussion, I think, at Wise, taking us to that next level of being data-driven, where it's not just kind of at a micro level data-driven, but we can have the same conversation across the whole company, and people from teams as wide as treasury versus the business team versus the financial crime prevention team can all have conversations about our projects and sort of speak the same language and compare the same numbers. So that's been a really interesting evolution that honestly we're still going through, but I'm already seeing leaps and bounds in that direction.
So I just wanted to take a second to mention to our audience that you're more than welcome to ask questions. I already see one, but please give us more and more. The four pillars that you mentioned: instant, transparent, free. The fourth one escapes me.
Convenient.
Convenient. Are those the criteria used for product validation overt-wise? Like, are those the pillars that, like, if it's not standing on this foundation of those four pillars, it has no reason to be standing?
Yeah, it's been really interesting with that. Particularly, actually, you mentioned the open products roadmap earlier, and this was one of the conversations that drove, because the company's been really good at talking about the four pillars externally. Like every quarter, we release our mission update to users saying this is how we've gone. But starting to release our plans for the future for what we're going to ship really drove exactly the question that you just asked, Philip, of, okay, for each item, we said, okay, we should be able to link it to a roadmap pillar. And for some of the items, the teams sort of cast around thinking, okay, I can kind of draw a link, but it's a little bit of a tenuous, like multi-hop link. What does this mean? And for some teams, that meant that they were still doing something valuable. What they needed to do was just communicate more clearly what the link between what they were doing was and driving to the mission pillars. For example, like infrastructure teams, they keep wise.com like resolving when you type it in. That doesn't necessarily directly drive one of the mission pillars, but if they don't do that job, all of the mission pillars kind of fall to the ground anyway. And so that conversation was a useful one to have, and it really drove the conversation forward in terms of knowing what value some of the less front and center teams had. But for other teams, they said, okay, actually, you know what? This thing, it's hard to link this directly to a mission pillar. So potentially our prioritization needs to change. And so, as you said, like we started to move much more into the direction of we're validating product ideas with those mission pillars front and center. And then I think the next aspect of it that we're adding on to those four mission pillars is kind of a risk aspect. So we're saying, okay, we're going towards these four things. This is what good looks like. Adding on to that, we've then got this aspect of, okay, and how risky is the project that we are taking on? Like, is this a certain bet? Like, we should ship this right away because, or rather, we know that this will be a 2% improvement on price or what have you. Or is this we kind of hope that it's going to be a 2% improvement? It could be as high as 5, or it could be nothing. And so getting comfortable with this, I mean, I'm a former economist, so I start to speak in terms of portfolio optimization if I'm allowed to. But what we got to was this idea of like a risk return trade-off and like being along the risk return frontier. And again, this is kind of an early stage discussion, but it's the direction we're going in terms of validation. Adding on which pillar is it going to drive and how much is it going to drive, and how confident are we about getting there? And like low confidence is not necessarily a bad thing. You could have something that's a huge bet, obviously, but may not pan out. The important thing is that you don't fill your entire portfolio with those bets, because the risk is you might end up with no value created whatsoever. The direction I think individual teams and kind of tribes are going in is getting to the point where we're saying, okay, if we're making these big bets that are uncertain, how do we make sure that we've got enough smaller, more certain bets to fill our roadmap with, that such that we are still making progress towards mission zero, even if these don't pan out? And so kind of evolving that conversation from just purely a expected value to an expected value plus kind of dispersion of risk conversation. That's kind of how we've started validating product ideas. And I think it's really giving an extra dimension of nuance to the conversation. But yes, as you were asking, like the core of it really is, here's our 4 mission pillars. How are we driving that forward? And our CEO, Christo Cowman, is amazing at that. Like every quarter, he's constantly on the mic, like both externally to our customers and internally saying, okay, how is this driving value? Like, how are we driving towards the mission pillars? Let me see, like make sure we can tell our customers why all this investment we're making connects to what's important to them, these 4 things. So that's kind of the heart of it, I guess. Oh, I think you're muted, Philip. Maybe it's just for me, but I can't hear you. Sorry, mate.
Sorry.
There we go. No.
Anyway, I was just asking, as a PDM-wise, you work with many stakeholders, and a moment ago you mentioned that you know both sides of the coin, from the troublemaker standpoint, the standpoint. So here, what happens if the coin is slightly more multidimensional? Because you don't have just two sides; you have compliance, operations, engineering, risk management, and product yourself, which sort of is an umbrella term over all of those, but it has to fly somewhere. So how do you make it all work together?
Yeah, it's the key question, I think. And what struck me in the last, I mean, I've been in a compliance product manager role for the last 2.5 years or so. And what struck me at some point is that it's product management on hard mode, even, I think, not to talk myself up too much, but you've had like product management normally has that Venn diagram of engineering, business, and design, or like kind of user experience type thing. And you need to marry these trade-offs a bit. As you alluded to, though, add in kind of compliance and operations, and then kind of an element of risk management. It might be included in compliance, or it might be an additional one. And suddenly your Venn diagram is getting very hairy indeed. And so like this both adds enormous extra richness to the product, because you've got even more stakeholders with their expertise and with their like unique and valuable lens on the product and on the business to add. But the complexity is multiplied. It's not just an additive complexity, it's a multiplicative complexity. Every link in the network multiplies how many conversations you need to have and how many stakeholders need to see eye to eye to ship valuable and coherent products, I guess. So it's certainly challenging, and it's certainly not necessarily for the faint-hearted. It's a role where conversations are key. Like that's kind of the key aspect of being able to manage the conflicting goals and deadlines and priorities and so on. Like over communicate. There's no such thing as over communicating, is what I tell my junior product managers. Like, if you think you've repeated yourself too often, you're just starting to have said it enough times, basically. Like say it 9 times and then you might be getting to the right amount. So like over communicating and then really heavily investing in relationship building. That's how to make it work, because the relationships and the communication, that's the grease in the wheels to make it flow. So for example, for me, I have one-on-ones with each of the key stakeholders that I have. Like, so obviously the tech lead, and then sort of a business counterpart, but then also I build that relationship with the compliance stakeholders and the head of operations, all this sort of like all of these relationships where it's not necessarily the core traditional role of a PM, but these are stakeholders from whom like key information needs to flow to me, and whose opinion on things can really make or break the product that I'm shipping. And so it's not really enough just to sort of throw products or project updates over the fence to them. It really needs to be a relationship where they trust that I'm doing a good job and that I'm looking out for their interests. Because without the trust, it becomes a transactional relationship. Everything slows down. Everything becomes a lot more painful. With the trust, even what could be big screw-ups can typically be solved quite quickly, because like everyone understands, okay, we're all trying to achieve the same thing. Daniel understands my viewpoint. Daniel's looking out for me. Maybe this did go pear-shaped this time, but I can forgive that because, I mean, it's just a mistake. It happens to all of us, rather than this is Daniel potentially having screwed me. No one thinks that, I don't think. Talk to my colleagues, but no one thinks that, I don't think, partially because of the effort that I've gone to build the relationships. And I see that from all the other PMs in my space too. Like that communication aspect, that relationship building aspect is even more important than a traditional sort of product manager. And then the other aspect is kind of the complications of prioritization, because like, as I said, normally you're prioritizing between, okay, are we going to ship something to pay down some technical debt, or are we going to ship something to like improve the customer experience? Add on here, are we going to potentially also ship something to address a key regulatory gap, or are we going to ship something to make operations much more efficient, or are we going to ship something that then unblocks growth for the rest of the company? So we've suddenly got a whole lot more spinning plates on our desk to keep going. And so then that prioritization conversation becomes more complicated, complex, and also has a lot more people to potentially disappoint. I guess is the difficult part about it. And so again, just that kind of over communication is what I've found to be the key. Like bringing everyone to the same room and saying, look, here's the problems that we're facing, or here's the problems we want to solve. We only have limited resources. We think we should do X, Y, and then Z. What do you all think? Like, here's our reasoning. Like, we think that the compliance gap is the most aggressive problem to solve because here's the things that could happen if we don't solve it, then operations, then whatever else. But we want to hear from you. Does this make sense? Do you think our reasoning is good? And then you both gather better information as a result, and everyone leaves the room feeling A, consulted, and B, like they've bought into the plan, rather than the plan having just been made by a shadowy cabal somewhere in a back room and then inflicted on them. So yes, it takes longer, and yes, the sort of communication burden increases, but without that, I mean, I think an engineer, one of my engineers said it really, really nicely. He said, you can spend a week coding to save an hour of conversation. Same thing here. You can spend a week shipping product to save an hour of conversation, or you can ideally reverse that equation and spend the time talking in order to sort of ship the best product. And really that kind of falls to the product manager. So if you don't like a lot of communication and relationship building, maybe don't into the compliance product management space would be my advice to anyone listening.
I mean, having dealt with product managers a lot, especially Guru, and hearing what you're saying, especially upon somebody's entrance into the IT world, the word product might sway somebody to think that this is more of a project management, or that it has not that much to do with business, whilst actually the elements of relationship building, of establishing rapport, of over communication, to the point where when you're asking somebody, tell me why I'm wrong, they say you're not wrong. And these are the drivers of a product manager, it seems, and they're much more spearheading the activity than all the product knowledge. The product knowledge is just the train, but the rails are especially what you mentioned. So completely agree with that. So I'm thinking about this, and I'll actually love to talk about this with you even after the show. Extreme regulation of fintech, especially compliance. How do you experiment in such a regulated environment where, experimentation usually has to have some sort of sandbox environment? And I'm not sure that the lawmakers, regulators, and governments are keen on creating such sandbox playgrounds for regulatory experiments. So,
yeah, it's a really good question, and I think actually cuts to the core of the tension for fintechs, honestly, in the modern world, which is, as a tech company, I guess Facebook's dictum of move fast and break things approximately describes every tech company to more or less, to greater or lesser extents. But really, you move fast, you move at the speed of bits, basically. Whereas regulators tend to come from a world where you move at the speed of paper, and also where things are safe and where things are working. Like the financial system works okay. Some of us remember 12, 13 years ago when it didn't work okay for about a year. And that's what regulators really want to avoid. Like, slowing things down by 10% is an acceptable price to pay to avoid a 2008 style explosion in their heads, which is a legitimate viewpoint, honestly, having come from the regulator space. And so the question becomes kind of like, how do you marry these two viewpoints? How do you, as you said, experiment in a way that doesn't cause raised eyebrows amongst the regulatory and legal community? And I think not to oversell my favorite point of communication and relationship building, but I think it kind of comes back to that again. Like the failure state that I've seen too often in banks, not just fintechs either, just like from banks generally or financial institutions generally, is treating the regulator as this kind of, at worst, enemy, at best kind of teacher-like figure who's sitting over there and like it's like that 80s movie and you're trying to get away with things basically and hoping they don't notice and send you to detention. And this is a really unhealthy kind of dynamic. Like the Breakfast Club was fun, but the relationship between the principal and the 5 students is not a good one, really. So a much more productive one is to treat the regulator as yet another stakeholder who wants the same things you do. Like they want to have a safe, well-functioning financial system in which customers are safe, consumers are safe, and businesses can flourish. Like, this is good. I disagree with any of these points. We may disagree on how we think the best way to get there is, but let's have that conversation instead. Let me show you, let me tell you about how I think we can get there, how I think we can experiment safely. And then you can tell me, like, you, regulator, you've been around for a while, you've seen people do unwise things. Tell me about it. Like, I don't want to fall into the pitfall either. Like, let's work out together a way that we can like evolve the situation and get to a better equilibrium and better get to the goals that we both have. So I guess turning it into a shared problem to solve, that's the kind of key phrase I would leave people with here. And the way we did this at N26 actually, and also at Wise, was kind of engaging with regulators via our amazing compliance teams. We said to them, look, here's what we want to do. Like, we have these ideas. We don't know if they're going to work, but we'd love to try them out. We don't want to just like throw everything into that boat. We want to test it. How do you think we can engage with regulators to be able to do that? And like, to their credit, in both cases, the compliance teams were able to say, okay, let's say risk-based approach. Let's take a risk-based approach here. Let's say we only send 5%, 10% of our traffic through this new system. Like, we try like checking people's IDs with this new automated system, but we only do it for 5%. Okay, we'll test that for a month. We'll see what happens. We'll check what the rates of fraud are. We'll check what the rates of money laundering are. We'll check what rates of kind of rejected IDs there are. Compare that with the original. We've only done it for 5%. We'll tell regulators we're going to do that. We'll report the data to them and say, look, here's what we found. Here's what we learned. Here's what we recommend we do, and see what they think. So we're not just going to sort of wholesale switch over. We're going to treat it as an experiment and bring them on board with learning as well, and treat it as something that is going to benefit them too. Because if we find a better way to check people's IDs or mitigate money laundering risk or whatever, like, that's great. They can then go spread that to the rest of the industry, and they've found a winning combination too via our hard work. So just treating it not as something you need to hide from the regulator, but as like a shared problem to solve of how do we innovate safely, just really changes the game. And so the critical and then the critical element to doing that is having a really effective compliance team that builds those relationships with the regulator, and kind of maintains them and treats the regulator as a partner to be brought on board. And if you have that, really, it kind of changes the whole landscape for you, in my experience.
I mean, I think that works as the basis of most relationships. Professional relationships, romantic relationships, age relationships. Like, let's gang up on the problem together, right?
Yeah.
So that's the simplest principle people sometimes forget. And couldn't agree more. Even sort of propping this up with an example of someone that we interviewed in Disruption Talks some time ago, Philip, the founder and CEO of Zilch, so the buy now pay later from the United Kingdom. The differentiating factor for them was the fact that they proactively and in a way advanced started working with FCA, so Financial Conduct Authority in the UK, to actually land a consumer lending authorization to be a legit BNPL and not have any concerns along the way. So it seems that the people who get $2 billion valuations, unicorn or something like that, I think that was the title. You guys must be onto something with this approach of let's stay in touch with the regulators, not wait for the knock on the door. So I have some questions about product management, but I also have an interesting question from the comments. We're asking for an opinion here. So actually, I read a better headline yesterday because, of course, the concerns with Jack Dorsey was that he was a part-time CEO at both companies. I read this, of course, satire headline that Jack Dorsey shocked to learn that he was the CEO of Twitter for the past. As he's leaving Twitter, so his vision, brainchild, I'll call it, as Twitter was, to focus on his fintech company, so more on developing the future in a tangible way. What do you think his next step should be or will be, if you're up for such a prediction?
Do you mean with Square itself or with Jack Dorsey as Jack Dorsey, do you think? What's the...
If you guys are buddies, let me know. What's next step for Jack as Jack, but I'm thinking here we're more asking for a Square angle approach from the fintech perspective.
Yeah, it's an interesting question. And I have to say, I really love Square. We used them at the escape room. That was how we took payments, because it was just the absolutely most frictionless way to go from like starting the room to saying, holy crap, we need to take money, buy the little $20 device, stick it in our phone and go. And like using the headphone jack, just like, sorry to geek out on them a little bit, but like just a brilliant way to circumvent restrictions on payment devices that Apple had. Just use the headphone jack was the easiest input output method they could have used. So just brilliant, and I love them. It's an interesting one because the fintech landscape is becoming quite intense at the moment, I would say. I mean, you've got Stripe trying to eat the whole world, basically. You've got like Google and Apple with their fintech plays, like their kind of card plays and the Google Pay and Apple Pay. And like you've got sort of the neobanks working out how they should exist, or like what their raison d'etre is. And then like Square is kind of more in the hardware and like the payment exceptions space. And so the question is like, do you double down on your core use case, I think, like, and just say, we're going to own this vertical? Like no one's got, like, Square is going to be the place to come if you need to accept payments on the fly, like quickly set yourself up with accepting payments? Or do you then go wide and then try to get more of an Apple type play where Apple, I mean, with the new MacBooks, they've shown that like vertical integration is just a game changer, at least in some spaces. Like doing their own chips has like changed the nature of their laptops. Like could be a similar thing in the Square space. Like if you say for Square, do we want to then go in the neobank direction and start becoming the banking option for these companies that are accepting payments through us? I don't know. It's tough is what I've experienced to go wide. Like each vertical within fintech is complicated. Like there's a reason that Stripe kind of, if you have a look at their roadmap, it's fascinating. Like over the last decade or so, they went in, like there was a period of a few years where they basically didn't release new products. It was like they were just in this like period of, it looked like hibernation, but what they were really doing was building up the strength, building up the capacity to then explode. And then since then, they've been releasing products at a frantic rate. But I'm certain that it took them that entire time to just get good enough and get enough of a good foundation to be able to go that wide. And so I think it's the same thing. Like if you've got a good, profitable core business, the temptation, I think, is to go wide and say, oh yeah, easy enough, we can just eat more things. But it's harder than it looks. And so I would personally say, double down on what the good core use case is for starters. Like if Jack's listening to this, like make sure that your own house is in order and then only cautiously expand. Consider more of a partnership approach potentially, rather than trying to turn Square into the everything app that a lot of companies seem to be trying to do. But yeah, certainly don't abandon the original gangster users, because I was one of them, and like I still haven't found anything as magical as Square, honestly, for just like making payment acceptance super easy as a small business. So Jack, if you're listening, good luck with the new single gig that you've got going.
No more side jobs. Further alleging that Jack is in fact watching this. I'm sure that you know, Daniel, that's Twitter introduced tips. So the ability for any user to send to any user Bitcoin via Strike. So also a very cool fintech I've been watching recently. Mm-hmm. So, you know, my prediction would be he will develop Square solutions as such, and Twitter might be just a sandbox where he will go and see how that works on a very human to human, so to say. Right? Because if you have a bunch of people who are interacting with each other, there's Twitter Blue, there's super followers, even Instagram is launching not close friends, but exclusive friends, so ways of users. So, and these are monetization activities without the brands between them, because it can be the creator and the user, or the user to the user. So I expect Jack to take a lot of that social thinking, apply it to the financial product, and give it back.
Oh, I like it. It's there's a good quote saying every company becomes a fintech at some stage, and so that kind of fits with your prediction of like it's Twitter that Jack's going to go over here doing pure fintech and then send the lessons back over the fence. I like it.
Yeah, the thing that you mentioned, every company will become a fintech company, is the Andreessen Horowitz article from 2020 that I reference all the time because it's applicable to everything that we talk about on Disruption Talks. But Jack, thanks for becoming the topic. And also just jumping into another question before we jump back to our talking points. Krzysztof loves the energy level of this conversation. Krzysztof, we're all here for you. Daniel, have you experienced a situation where an idea for a service product you strongly believed in failed and wasn't appreciated by the customers? How did you feel about this, and what have you learned from this? My bet, first question, how did you feel about this? Not great, but what have you learned from this? I have no idea. Tell me.
I think every product manager has like fallen into this at some stage. You've shipped something you thought was going to be amazing and it was an absolute flop. I guess I've got a sort of a nice example which has a nice fairy tale twist at the end that is maybe a little bit cheating, but I still think it has a nice moral. So back in the KYC world at N26, we shipped this beautiful design update to our user flow. Like, it was quite, at that stage, it was a few years old. It was quite clunky. It wasn't in line with our design guidelines anymore. And our wonderful designer at the time said, okay, we're going to take this opportunity, make it visually nicer, but also improve the instructions for the user to make it really clear how the core problem for KYC is you need to provide a legible picture of your ID. That's basically what we want. Harder than it looks. And so the designer said, okay, we'll work out a better way to do that. And so we shipped this nice set of beautiful instructions saying, okay, like, watch out, don't have like really bright lights, don't have like, make sure it's not too dark, make sure like you don't take a blurry photograph, all this sort of stuff. And we're like, okay, yeah, high forecaster management. Yeah, we're going to see like a 3 to 5% uplift in conversion from this. Users are going to love it. Unfortunately, no. Unfortunately, barely any change. It looked a whole lot nicer. Our design team was really happy, but users seemed to not care whatsoever about it. And so this was quite disappointing, particularly since I'd called my shot and it did not work. But what it gave us the opportunity to do is sort of come together as a team. And that was one of the reasons this is a happy ending story, because at the time, the team that I was working with was just super cohesive. Engineers were really involved in product decisions. The designer was really engaged and really embedded in the team. So we functioned super well as a team. And so we came together and said, okay, why has this failed? Or why has this not done anything? We've spent 4 weeks shipping this and crickets. And so like we talked to a few users, we did some research, like we asked a few people internally what they thought and kind of triangulated that maybe the question we were asking was wrong. Like, we had been asking ourselves the question, how do we prevent users from taking bad photos? And so then we had this nice set of instructions. It was beautifully worded, copywriters and everything. And we realized actually that's like one step too low. Really, the objective that we're trying to get to is like have users successfully complete KYC. So i.e. give us a correct photo, give us a good enough ID photo. And so, okay, maybe we should be approaching it that way is what came out of that. And actually one of the engineers suggests this. They said, okay, we're telling people like where the wall is. Maybe we should be pointing at the road. Like, we should be saying like, drive here. Don't like, it's not a avoid the wall. It's a, here's the road. So we then said, okay, we'll keep the design updates. That's beautiful. And we'll change the wording. We'll change the masks that we have that kind of guided users into what photo to take, to say, it should look like this, make like good lighting, like centered, like legible, all this sort of stuff, to say, here's what good looks like. And we also, the other critical thing was that we said, maybe people don't understand why we're giving them these incomprehensible instructions. Like, it's like, why do you care about all this stuff? And we said, okay, we'll tell them, if you don't give us this stuff, if you don't give us a good photo, then we're not going to be able to identify you, which means we can't keep you safe, which means we have to reject it and ask you to do it another time, blah, blah, blah. Suddenly that was the game changer. Then we did see that 3 to 5% uplift. Like, suddenly we were guiding users towards what good looked like. So users could see, aha, I need to take a photo like that. I need it to look not blurry and so on, because they need to identify me. Cool. Now I get it. Like, we still lost a few users there. Like, it wasn't the silver bullet for turning it to 100% conversion. But it was like, it really drove the value that we thought was there from the start. It just turned out we were sort of asking the wrong question. And really the lesson that I took from this was, like there were two kind of. One was question your assumptions, even the very buried ones, which this was. And the second was, man, there is no substitute for having the whole team involved in product development. Like if we hadn't had the whole team involved, our intelligence would have been limited by mine, which is quite a low bar. Whereas this way, we had like the designer, all of the engineers, a lot of smart people, and all the ideas bouncing between all these smart people, which kind of raised our level of intelligence collectively to a height that like no individual in the team could have reached. So like, I hope that answered your question okay. Yeah, so my initial reaction, as you predicted, Philip, was sadness, but kind of the way we reacted to it and the way we evolved from there, I think, has been one of my favorite kind of experiences as a product manager, like in my whole career, actually.
Well, so I wanted to comment on so many things. I just got to get my mind straight. Well, firstly, just like you mentioned, the principle of getting the other human to understand your why, even if it's why I need to cut in line in front of you. If you just ask, you might say no, but if you say that you gotta get the medicine to your close one, the chances increase. It's a nice book by Robert Cialdini on the 7 principles of influence, right?
Yeah, it's a good one.
And in terms of what you mentioned about the product management, of course, it's very human to feel sad when you're wrong, because it would not be. But when you look at the stats, even quantitative analysts or quants from hedge funds, they're happy if they have a 50% hit rate at this point. So people who have the mind geared to do that and all the data on the Bloomberg terminals versus you validating your assumptions, dear product manager and everybody really, feel free to leave your ego at the door, because you're supposed to be wrong, and the sooner you are, the better, because then you might avoid a blunder later.
Very much. I think if you're not wrong at least 50% of the time, you're being too weak. Honestly, as a product manager, you should be like putting stuff out there, getting it wrong, recovering quickly. Otherwise, what's the point, really? Anyone can ship small, easily predicted features. Your job is to like work out how to be wrong better every day.
Yeah, what was that quote? That if you're feeling safe, you're not going fast enough?
That's it, exactly. Or something about ships in the harbor too, I think.
So we have identified the features of character of a good product manager, and it would be a slightly boring question for me to ask you what are the core hypotheses for a good one. Let's flip that. Red flags. What makes you feel that person is going to be, let's even say we got a scale of -1, 0, 1. So 1 is what we've established, the personal concierge to human emotions, ego.
Nicely put.
However, what happens when we go to 0, which is a average product manager, which let's say they're good enough at their job, but not what you needed. And -1 is where you see that this is actually going to drive the product in the opposite way.
Mm-hmm. Yeah, it's a good question. The zeros are okay, to be honest. Like I know there's a whole lot of talk about A players and only hiring A players. Like not everyone can start as an A player. Like people need to cut their teeth on something. And so you may start as a 0. I don't know if you're alluding to this, but there was a great book by the, was it Chris Hadfield, the astronaut, who his dictum is, he's a Canadian astronaut. His dictum is like, when you join a team, strive first to not be a -1. Like you're not going to be able to be a +1 initially, but like as long as you're not dragging the team backwards, that's good. And I think it's the same for product management. Like I'm quite okay. I've been a 0 a few times in teams where either like the job was new or the domain was new, or I just like needed to find my feet for a while. Product management, though, is a super high leverage position. And so being a -1 product manager makes you extremely dangerous because you don't just corrupt your small environment around you. Your corruption sort of spreads quite wide. And so like you asked red flags. What would I say? You alluded to something quite good before, Philip, of ego. I think that's probably one of, if not the best red flag. Like watch for the use of the first person pronoun in how much this person speaks, particularly about things that the team has been doing. Like I'm all for people taking credit for things that they have genuinely done. But as a product manager, I've genuinely done not very much. I've genuinely had a lot of conversations. I've genuinely greased the wheels a lot. The designers made it beautiful. The engineers have shipped the code. The compliance people have like made sure that the regulators are okay. Like a product manager is second best at everything and is the first job that could go on holiday if they needed to, and things would still get done. So product managers who have too high a sense of their own self-importance, that's already getting dodgy, already getting risky, that decisions are going to be made based on their preferences based on what they think is good rather than what is good and what the kind of consensus view of good looks like. I think this comes like the Steve Jobs example is, I think, one of the biggest misinterpreted things in the industry, to be honest. Like people see Steve Jobs and they say he created amazing products. Absolutely true. And then they say, and he was this huge egomaniac who was absolutely relentless in saying, this is the vision, this is where we're going. True. But these things are not necessarily inevitably tied together. And also, you are not Steve Jobs. Like, whoever is saying this to me, I guarantee you are not Steve Jobs. And so trying to be like that just makes you into an egomaniac. You're not going to create the iPhone. And so I think that's one of the big failure points, big ego. The second, I think, is sort of a more forgivable one and one that can be trained out of you, but it's the PM trying to do everything themselves and disappearing into a room and just trying to do it all and make the decisions and kind of working with the garage door closed, to reverse the usual idiom. And you can do this as a PM. You can kind of get away with this for a while because sort of decisions come out, like Jira tickets come out of your garage, all this sort of stuff. Like the machine keeps flowing, but the quality of what comes out is going to degrade very quickly, and the buy-in from the stakeholders is going to degrade extremely quickly. So trying to be a lone wolf, isolated island product manager, that's the other kind of failure point. Forgivable, treatable, but it's going to make you a -1 in the short term. So yeah, so if I were hiring people and if I were evaluating product managers, I'd listen for how much ego seems to be on display and how much collaboration seems to be on display. Like ego should be dialed right down, collaboration should be dialed to 11. And if these two things aren't true, I'm starting to get a bit worried.
Yeah, I mean, especially that with Steve Jobs, it wasn't the impolite features of character, so to say, diplomatically, that were the driver of his success. It was rather the certainty that he had all along, also being an outlier. I've seen this meme that someone says, but Bill Gates dropped out, Mark Zuckerberg dropped out. Yeah, but they dropped out of Harvard, not GCSEs.
Exactly. That's it. It's correlation, not causation, I think is how I would say it.
So a question from me to a senior product manager at Wise: how busy are calendars at Wise? Because it seems like we have 5 minutes left till 11 a.m. Should we keep it to 11 a.m. or do you have a couple more minutes?
I've got time if you do, Philip. I'm enjoying myself, and so no one's going to hang me for being 5 minutes late to a meeting.
Okay, so yeah, another question is, what's it like to work at Wise? Now, jokes aside, actually someone is asking about the advice for someone who's from a non-fintech background to join Wise.
Well, I mean, for starters, I barely had a fintech background, to be honest, when I came to Wise. I had a year at N26, but I mean, N26 was my first fintech. I got a job there. Wise, I think, is similar to that as well. What we're looking for at Wise is smart people who can solve problems and who are obsessed with driving customer value. We've got our 4 mission pillars, and we really are serious about that being the reason for you being here. And if you can demonstrate that, if you're smart, if you can solve problems, and if you really want to make a difference to customers, you're already right in. And that's kind of what it's like at working at Wise, honestly. I like to say we're sort of passing through our teenage years as a company to some extent. We're a public company. We're out of that startup insane stage, but we're still not at the super established giant behemoth kind of stage. And so you'd be joining at a time when there's still a whole lot of exciting problems to solve, and there's a whole lot of processes to implement and kind of foundations to lay to take us from our current, quite good state to the 10x, 100x state that we want to reach. We've eaten more than 1% of world international payments, which is huge, but it's only still only just more than 1%. Like, it's still quite small. There's still plenty to go. But to get there, the challenge is to solve the sort of opportunity to make a big difference, working on how do we make sure the processes work? How do we build the right technology? All this sort of stuff. It's really an amazing time to be at Wise, I think. And yeah, specifically, like if you want to join Wise, I guess that's the question here. Like, I would there's sort of two paths I could recommend. One is if you have your eye on a specific role and you think you could be cut out for that, make yourself stand out from the rest of the pack. Like, Wise gets a lot of applications. We're now in that sort of tier of extremely desirable companies to join. And so if you just apply cold, chances are you're going to get lost among the other 100 resumes that we see. So take the next step and say, okay, this role needs to solve problems of type A, B, and C. Let me demonstrate that I'm able to solve problems of that type. Like, you don't need to go crazy. You don't need to spend 40 hours crafting something, but just say, okay, I want to work in the financial crime prevention space. One of the things that you guys probably want to do is collect people's IDs with lower friction. Here's how I might mock up a flow to do that with a machine learning type solution, or maybe improve on the current flow. Like, a friend just sent me this morning, actually, some screenshots of our flow with some suggestions for how she would improve them. I don't know if she wants a job, but that's what I'd do if I were her, if she did want a job. So that's if you've got your eye on a specific job and you think you might have a chance of getting in. The second path in, though, is just apply for kind of an entry-level role that is open to everyone: customer service, operations, this sort of stuff. Because the sort of upwards mobility at Wise, as a result of being a giant high-growth company, I'm desperate to find talented people around me permanently. There are more problems to solve than I have hands to solve. And so if I can find a smart person adjacent to me in customer support or in operations who is willing to say, yep, give me that project, I'll run with it, I will be so thankful. And your name will pop to the top of my list when I'm looking for my next junior product manager. So coming in at the ground level both will teach you about Wise, and it will be sort of your foot in the door for getting to many, many, many other opportunities within the company. So that would be my advice to you.
Definitely just get behind enemy lines, infiltrate, and it's so much easier from then on out, right?
That's it, exactly. Get a seat on the rocket ship.
Yes. Get a seat on the rocket ship. And like I said, I'll love to talk about this with you after the show, about sort of those other roles. Don't worry, neither you, Daniel, nor Nedguru, I'm not looking to jump ship. I'm just in employment landscape for people from the legal world that would like to go into the tech world. But another topic, another time. So being respectful of time and trying to wrap this up, I would lead to the last two questions. There are completely non-technical questions. There are personal questions. One is to you as a leader. The other one is to you as a human being. So the first one is, what's your decision-making framework? What's your rule of thumb? Any tips that you can share with other leaders in your positions, how to improve decision-making? And, there's no right or wrong answer. It's just what's your rule. What makes you cut through some decisions much easier, much faster? If what's the decision-making tree?
Yeah, it's this really is, I realized at some point, the kind of critical question in my role. There's just constant decisions to be made, and only 40 hours in the week at work, and there's well more than 40 hours worth of work to do. So which things do you devote time to? I mean, it's an oldie but a goodie, honestly. I have two. The first one, the old one, is the Eisenhower matrix. Honestly, I think he got it right, 70 years ago, of think about two axes, important and not important, and then urgent and not urgent. Your time as a product manager in particular is going to be sucked towards that first quadrant of urgent and important. There's always something there to be done. And that's good. There's still important things. The trick is trying desperately and trying every day, every week, every month, every quarter to prioritize and to carve out time for those second quadrant things, those important but not urgent things, because those are the things that are kind of like seeds that you're planting. Those are the things that will sprout into better customer value. Those are the things that will prevent stuff from becoming urgent in the future. Those are the things that will help grow the next junior product manager who will take time, take effort off your plate. It's all of those are the investment activities that, unless you have this really clear view on, I want to specifically take time to do those, you're never going to. And I think the Eisenhower matrix helps with that. And it's something that I try to use. And the second thing is just a simple one of work in public as much as possible. Like, don't, as I said before, don't disappear behind the garage door and make your decisions there and do your work there. As much as possible, share it with your team, with the product managers around you. Like, write the wiki article and then publicize it. Like, post about it in Slack, what have you. Because like, just giving yourself exposure to that feedback loop and giving yourself the ability to constantly collect realignment suggestions and people saying, hey, I've been working on this, check this out, or did you think about X, or what have you, just gives you a much richer data set to draw on to say, am I making the right decisions? Am I prioritizing the right things? Am I embedded sufficiently in the broader context to make sure that my ship is going the direction the whole fleet is going? So yeah, those would be my two. The Eisenhower matrix and then the kind of make sure that you're working in public have been what's helped me, I think, prioritize as effectively as I can.
Make sure that you're working in public. I love that. Last question. I'm handing over remotely a magic wand, and you get to abracadabra this into casting a spell that allows, not necessarily forces, every 12-year-old in the world to be granted with the gift of education on the topic of, and that's where you step in. There's no right or wrong answer. And again, it's just an answer that's yours. I want to know why that's yours. We've heard emotional intelligence, design thinking, financial prudence. We've heard leave the kids alone, let them be kids, stop trying to teach them. So we can roll with anything, but I just want to know the why.
I like it. I like NetGuru's R&D development. R&D department has obviously done a good job if they've got a magic wand like this. Nice work. Honestly, I'm on the side of let kids be kids. To be honest, I think if anything, there's too much emphasis on homework and learning at that age, and not enough emphasis on play and just following what you enjoy. So if I can change the question a little, if I could wave this wand over all 21-year-olds, can I get the engineers to? Yeah. Okay. Another couple of weeks of development, and we'll change it to 21-year-olds.
We'll raise money for the ones.
Okay, perfect. So I think it's not necessarily the only choice. Some of the ideas you just shared were good ones, I think. But in the modern world, I think basic statistical literacy, if I could wave the wand and just everyone kind of got this like basic level, I'm not talking econometrics, I'm not talking like theoretical stats that I suffered through in third year of uni, but I'm talking like being able to see a graph, understand what it means. When I say mean, median, mode, all that sort of stuff, like understand that and be able to read a blog article or a newspaper article and like critically interpret what it's telling me and understand whether I should trust those numbers. I think if we had a world where all 21-year-olds could understand that, and then they grew up to be older 30, 40-year-olds, we'd collectively make better decisions as humankind, and be prone to going down fewer bad rabbit holes as a result of statistical illiteracy. So it's not such a fun topic. I realize that lots of people don't like it, but that's why I've got the magic wand. So I would magic wand them all into some basic statistical literacy, I think.
Okay. That's a good one, and I completely agree. We don't expect you to know your ANOVAs or any others. Just understand when someone is trying to tell you the average salary is, you might not want to be interested in the average, rather the most dominant numbers that appear there. Which leads us to a wrap up of today. So Daniel, thank you so much. There are some questions mentioning that people have follow-up questions, but respecting the time here, mind if I reach you directly on LinkedIn?
Please, anyone reach out, go ahead, or post questions on the post on LinkedIn that NetGuru has shared, I guess, and I can respond there. Either way.
Nice, good plug. Thanks.
I gotcha. Yeah.
So, Daniel, like I said, expect me to reach out to speak to you after the show. But for today, I thank you very much in the name of NetGuru and our beloved audience. It's been a wonderful 66 minutes by my count. Any closing remarks? Anything you want to leave the audience with, other than a goodbye and thanks for today?
Well, it's been a real pleasure, Philip. Thank you very much for having me. And I guess whether you're a product manager or any role at all, there's no such thing as over communication. Go and talk to someone, ask for their advice, see how they're going, work out, find out what they're working on. Those conversations are really what drives value and makes your work life more fun. So that's my challenge to you today. Go connect with a colleague.
Go and connect with a colleague. So Thank you so much, Daniel. Thank you so much, dear audience. And we will be seeing you very soon on any other piece of content at Naguru that you'll be interacting with, preferably next week's Disruption Talks, also on a Tuesday. So once again, thank you everybody for participating and see you next week.
Thanks, Philip. Bye.
Bye.